In this session, let us understand the accounting aspects when goods are invoiced at selling price to the branches. In our earlier problems, we have understood that HO used to send goods to branches. HO will send goods to branches, and whenever the goods are sent to branch, so far we have discussed that they are sent at cost price. Now let's look at the another scenario where goods are going to be sent at not at cost price but rather at selling price. So what is selling price? Selling price is nothing but composition of two elements. One is cost, then next one is profit. So cost plus profit is equal to selling price. Okay. Now what are the accounting effects if goods are going to be sent at selling price to the branches? Now, first of all, why HO should send at selling price to the branch? That is what we should understand. Reason number one, basically to give instruction to the branch to sell at selling price. Okay, it means they have to sell at that particular price. That can be the motive number one, or the second motive can be the HO may be particular that branch should not know what is the profit made by the organization by selling those goods. I mean, if they are very particular that branch should not know what is the profit that is made by the organization, then HO will send goods at selling price, so the branch manager will have no clue as to what is the profit. Okay. Now let us understand what are the accounting aspects when goods are sent at selling price to branches. Every organization will try to understand what is the profit made by the branches. I mean, they'll be interested in knowing what is the profit made by the branch. But when goods are already sent at selling price, then it becomes difficult to find out the profit made by the branch because that includes already preloaded profit. So how that is being done? How branches are monitored here? Through an account called branch account. In data system, the branches are monitored through an account called branch account. Now, when goods are sent, the entry will be two goods sent to branch. Two goods sent to branch account. Now, let whatever be the goods that is sent to the branch, that will have some profit element. That profit element have to be removed so that we can have the cost. So what we can do, we can simply credit the branch account to the extent of profit loaded on goods sent. So buy goods sent to branch. Buy goods sent to branch account. Whatever is the profit, that has to be removed. So how to understand this? Let's say a company has sent goods worth 12,000. They have sent goods worth 12,000 to their branches. Okay. Now, this is sent at cost plus 20% profit margin. Okay. So, this 12,000 is sent at selling price, which is cost plus 20% profit margin. So, this 12,000 can be equated with 120. This 12,000 basically represents 120. So, we are interested in knowing what is the cost. For that, what we should do? We should subtract the profit. And what is profit? Profit is 20. So how do we find out the profit? Profit can be 12,000 divided by 120 multiplied by 20. Okay. So 12,000 divided by 120 multiplied by 20. So what we get? We get 2,000. So here I can write the value as 2,000 and here the value is 12,000. So on debit we have 12,000, on credit we have 2,000. So the net is 10,000 and that is the cost of goods that has been sent to the branch. So in that way we arrive at the cost of goods sent to branch. Similarly, these goods will also remain in branch either in the form of opening stock or in the form of closing stock. So when it is going to remain in the branch in those kinds of forms, how we are going to factor the profits? Okay, let's say there is an opening stock. Let's say there is a opening stock. So it is to balance brought down in the form of opening stock. So whatever the profit that is loaded or included in the opening stock, that got to be reversed to know what is the cost of opening stock, and for that we have to credit the branch account to remove the profit loaded on stock. So I'm going to pass an entry by stock reserve. By stock reserve. So entry is basically stock reserve account debit to branch account. Stock reserve account debit to branch account, and this will give us the profit that is loaded on the opening stock. Okay. Similarly, we'll also have closing stock. Let's say we have closing stock here by balance carry down of closing stock. So now this closing stock will also have profit element. So that profit element have to be removed. How? We'll write to stock reserve. To stock reserve account. So through this entry, the profit that is loaded on closing stock is taken care, it has been removed. Okay. So in this way, we are factoring, or we are actually loading the profits that were loaded on the stocks goods into branches.